In this video, we are going to see how we can enter the direct sales in QuickBooks. So let's get started. So normally in QuickBooks, what the customer follows is the normal route. That is, they give you sales order, and against that sale order, you convert it to the invoice, or you physically deliver the items to create the invoice. But that's not the case every time. If the customer have fixed amount to be delivered every single week, they might not order you for this, and you just have an informal process that the customer just calls you for the items and you just create the invoice. You're not following the sales order route. So in that case, you have to enter the sales invoices directly. So this is the case here with Mr. Bashir. He called you over the phone and asked you to deliver him these items. So let's create this invoice for them. I'll go to the create invoice and let's enter Bashir here. He's our existing customer. And let's put the date of 14th of January 2024. Bill to address can be mentioned. And let's select the multiple items. First one is Corolla windscreen. Quantity is 5 and rate is 16,000. So let's mention the quantity and the rate is 16,000. This makes the total to 80,000. Let's press tab. And the next one we have is Civic headlights. So let's mention Civic headlights here. 10 items. Rate is 46,000. This makes the total to 4,60,000 and 460,000 here as well. Next one we have is Suzuki filters. 4 is the quantity and 450 is the rate. Suzuki filters, 4 quantity, 450 is the rate. This makes the total to 1,800. So all of this, just check it by yourself. Each and everything is fine. And let's click on save and new. Why save and new? Because I have to show you the entry at the back end. But first, let's understand it manually. So basically, when we enter the sales invoice, this should be the backend entry. We know that we are making the credit sale, and at the credit sale, receivable is debit and sale is credit. But at the same time, you have to debit the cost of goods sold in profit and loss. And that's not what you have to do. It's automatically done by QuickBooks, and it will also less the inventory from the stock. So this is the combined entry for the single item. And QuickBooks makes the entry for each single item separately. Let me show you how. So let's go back and click on reports and click on transaction journal. Now, as you can see that in this entry looks too large, but it's basically the same. Account receivable is debit. Let me just hide this. Account receivable is debit and sale is credit. And for separate inventory asset, each separate inventory asset, it's making a separate entry. Same for cost of goods sold and the sales amount. So that's why it's showing it in a couple of lines. Otherwise, the entry is this one. So this is the logic. And if you want to, print this, this is the default preview, but we will later on learn how we can customize this. Now here it says past due. That's because we are in the date of future. Let's say we are in March and April or May, and we are entering the data for the January. So that's why it's showing this past due. But when you enter it practically in your company, it will be current dates only, right? So this is why it's showing this. So let's close. So guys, this is how you can enter the sales invoices in QuickBooks directly.